Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, April 24th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars, sentiment, structure, and trend. We're currently looking now at our market trend model. This is obviously based on the tick index. If you follow us any amount of time, you've seen us post it multiple times. This is the index the tick that basically shows buying versus selling via market participants in the overall market. And then we add a time component to it, and then we get this bolded white line here, which is our cumulative tick, basically aggregated over time to give us an overall direction and who is winning the battle of buying versus selling in the overall market. And then we add these shorter term moving averages for reference for trend. Yesterday we saw the large gap up, and we discussed this pre-market and with our SPX game plan as well as our members and our pre-market video that this was going to be a key area to hold on the gap up, or whether sellers came back in and tried to take control back of the overall market. And we've spoke about this really if you watch any of our pre-market videos from the past few days. The bolded CT, when it gets close to this colored ribbon, historically, again, over the past week, we've seen quick failures and then price depreciation to the downside. Even back here, we've had multiple times that this has occurred. And then yesterday, we discussed that we we're going to be intently watching how this bolded CT reacted at the open and interacted with this colored ribbon and see if we saw some turn to the downside as sellers begin to take control, and then an overall failure as we cross back below these moving averages, which is what we saw yesterday. So again, we'll continue to watch this. If you're a bull, you would want to see this bolded CT start living above these moving averages, crossing through this colored ribbon and to the upside, indicating that buyers are taking back control of the overall market from the sellers. And if you're a bear and you are anticipating more downside, you'd want to see this bolded CT start doing a linear fashion to the downside under all the moving averages, and all these moving averages roll over to a negative slope. We'll reference the new highs versus new lows breadth indicator. We did see new highs barely outpacing new lows yesterday. So again, more stocks were being bought than sold 2 days in a row compared to this previous massive selling that we had seen. We did see in the afternoon some institutional selling come in, not of a large status, but again, institutional selling was happening. This is our filtered cumulative tick. It's based on plus 1,000, minus 1,000 large tick orders, which are usually matched with large block orders for institutional or larger participants in the overall market. I'm going to move on to a zoomed in of our market trend model. This is what we post in the Discord for our members. And we use some combos, tag combos that we've back tested for higher probability setups. But again, zoomed in, you can quickly see the failure that started occurring yesterday, and then to the downside, we crossed below those moving averages and then continued to the downside. I went live on X. Make sure you check that out yesterday, and then posted some follow-up charts that we use with one of our tools intraday to show us really what's happening with market participants and the speculation of the calls versus puts in the overall market. So make sure you check that out on X and follow us there as we'll be doing more live sessions intraday. So moving on to the SPXA, this is like the cruise ship of the overall option structure. We like to look at the option structure through our three pillars: sentiment, structure, and trend. Again, watching what larger market participants are doing, as these are monthly and quarterly expiries. So this is institutional, slower moving money. Again, we are still put dominated within the overall complex. We see that 5,400 is a key level, 5,450 to the upside, and then to the downside 5,350, and then all the way down to 5,300. Some larger areas of net delta and total OI that will most likely be areas of price either stalling or reaction that we continue to see. Obviously, we've referenced that 5,400 for the past few days. So again, we'll continue to watch this day over day to see if we see any improvement. We are seeing some improvement to the downside below spot price. This was completely red negative net deltas, but we are seeing some green fill in, indicating that we are having some in the money calls being exposed via most likely closing of puts and then filling the option structure in. Now, this could be dampening to the downside if we see some larger price move to the downside, unless this structure starts to change back to red negative net delta, indicating that larger market participants are speculating that there is more downside ahead. Moving on to the SPXP, we call this our cigarette boat, or quickly, these are 0DT or weekly or monthly expiries. So obviously these contracts turn over much faster than the SPXA. Again, we follow the SPX because we separate the SPXA and P because the SPX is the most liquid, largest option structure that we can get an overall view and help us get a game plan of where market participants are positioned. So again, this white box is our transition box. It maintains wide and loose. Expected move is still at 92 points. So a large range and volatility, again, indicating 5,400 is a large area that we'll continue to watch. And then 54.50 to 54.45 the upside, double strike there, and this 5,300 to 5,310 to the downside. We'll talk about that here in just a minute when we move on to the 0DTE. So improvement again below spot prices. We see positive net deltas filling in via the green, indicating we do have some in the money calls below us, where if you scroll back a few days, to a week, this was completely red, negative net delta, indicating that out of the money put speculation was basically controlling the overall complex. Even though we are still put dominated for all the expiries, we do see some improvement within this overall structure, indicating that the bulls are trying to exert some of their force on the overall structure. We'll move on to the SPXP. This is 0DTE, obviously short dated for today contracts. We do enter this state call dominated for today. As of now, projected open would be above transition. This is an important area to maintain to stay in a more call dominated structure. We still have a significant amount of in the money puts overhead via this negative net delta, but we do see this Captain Condor. If you've known anything about that, you can research on Google. There's been an extensive article about this trader, but we do have these double strikes that we are indicating here that most likely are these condor strikes, 52.85 to 52.90, and then we have 5,300 down here. It's a key level, and then to the upside 54.50, 54.45, roughly about 10,000 contracts sitting there. So these would be the goalposts for the day that most likely we'd be watching for price reaction. We saw the reaction at 54.50 yesterday on the gap up. We could not get above that and maintain it, and then we cross back below 5,400. So again, 5,400 will kind of be that key area to the upside that we would like to see maintained if you're a bull. But again, navigating these in the money puts above us may be a difficult push to the upside. And then to the downside, we do have a dampening type effect with these in the money calls below us, as well as transition. If we start getting into the transition area, we'd anticipate some more volatility. And then if we're below transition, if we do see some of these in the money calls erode below us, then we'd anticipate some more weakness down towards the 5,300, most likely stalling into that double strike of 52.85, 52.90. Not really anticipating any large move down past that. And then within the overall structure, 40,000 foot view, we're basically in no man's land. We'll talk about that here in just a minute. But if you look at this large 100-point range, almost structure here, 150-point range, we've just been chopping within this overall option structure really for the past couple weeks, which we'll look at the end of this presentation. Moving on to the GEX ratio. Again, this is a better put call ratio. We've done extensive education about this. We add a time component via gamma. We talked about yesterday that we needed to see this red dotted line start moving up towards the 1 level, indicating that short dated call gamma was starting to take control over put gamma. And that is occurring for now. We've seen the bounce, but again, we'll watch the price action. And if this is just a short-lived overall bounce within a bearish put dominated state, then this will most likely turn back down, indicating that call gamma is leaving, short dated call gamma is leaving the overall structure, and then put gamma is taking back control. So again, that 1 level will be important to get above and cross if you're a bull, and then if you're a bear, you'd want to see this stay below 1 and then start moving back to the downside. Most likely would indicate that we may see some short-term weakness entering the complex. SPXP, the overall structure looks a little bit weaker than the SPY and Qs. We'll review that here in just a minute. But again, as we've discussed, we want to see this this dotted blue line stay above 0, indicating that call gamma or call speculation is maintaining control of the overall structure above and below spot price. And then this green dotted line is the right-hand plane that's above spot price. We definitely want to see this cross above 0, indicating that out out of the money call speculation is overriding the in the money puts that we just talked about in the web app above spot price. We're not seeing that at the moment, and then projected on out in time for the rest of the week. We saw this short-term bounce, but then the weakening comes back in that right-hand plane. And then consequently, we are seeing the left-hand plane weaken on out in time also, and then you get your delta balances dropping back below zero. So this, again, is not a crystal ball. It's just projected on out in time that we could see some weakness coming into the complex through the end of the week and then possibly into next week. So we'll continue to watch that day over day. As I said, the SPY looks much better than the SPXP. Delta balance up here pegged at 1. We did see a short-term drop, obviously heading into today. But really the key indication here is the green dotted line, the right-hand plane, that's out of the money call speculation, is crossing above 0 on out in time. And we see the left-hand plane maintaining above 0.5 and 0, and the delta balance being pegged at 1, indicating that call speculators are maintaining control above and below spot price. The QQQ obviously looks about the same as the SPY. Again, just rehashing this, that we want to see the right-hand plane cross above 0 if you're a bull, indicating that out-of-the-money call speculation is occurring above spot price. So we have to have that out-of-the-money call speculation for spot price to move up. And then again, maintaining the left-hand plane below spot price, as well as the delta balance, indicating that calls are maintaining control above and below spot price. So we'll continue, again, to watch this day over day to see if we see a strengthening of the overall structure and complex in SPYs and Qs, which could lead to at least some price stabilization or price improvement across the board. Net stat command, this is our highest sensitivity strikes. Again, we discussed 53.50 yesterday. That's going to be an important strike to the downside. If we see any weakness below 53.50, I'd look for 5300 to the downside, but we do have in the money calls below us. But you'll also notice the in the money puts, obviously this is the highest sensitivity strike, way above spot price at the moment. But the balance here is really balanced, even though we do give a little bit of edge to the in the money calls here by about 400,000 contracts. But again, price dampening and depreciation into 53.50 would be likely for now, and we monitor this every 5 minutes intraday to see if we see any change via the net stat command. So we'll move on to the trading view chart for this morning. Again, I wanted to talk about that reference of the range we've been in from 5,200 to 5,400, or even up to 5,450, that double strike of the iron condor today. Obviously, that market participant or speculator has positioned appropriately via technical analysis and most likely the option structure. You'll notice our COTMC here. This is a proprietary level to GammaEdge. This is where out of the money calls go in the money, and consequently you've seen the profit taking at that same level day over day all the way back to Thursday, April 10th. So again, key level to the upside in the option structure, as well as technical analysis if you use that at all. So again, our options analysis is fractal in nature. It overlays with technical analysis also, but just gives you an under the hood overall look of how market participants are positioning. And obviously you see 54.75 is going to be a difficult lift to get over as of now, unless we see a significant amount of call speculation coming in above that level. And we'll be able to see that via our web app, as well as our intraday vol command via the volume of options contracts being placed. So again, 53.50, if we get below that, I'd anticipate some more downside towards 5,300. And then obviously we have levels down below us, those double strikes, not anticipating us to get below those, as we would be approaching the bottom of the range. And then 5,200 ultimately would be that bottom level that we'd look for price stabilization. If we cross 5,400, that might be an opportunity to go long for a price appreciation towards 5,450. I believe that most likely would be a stalling area up into 54.60 and 54.75. Again, remember, within the overall range and transition, so it could be a choppy mess, as you've seen really for the past week. So right in around in here is kind of no man's land, and it's going to be difficult for any directional trades to happen with any true edge. So we'll continue to watch that. Again, staying above 5,400 really is going to be key level for the bulls, and then obviously staying above 53.50. So, all right, with that, I'll leave everybody. Everybody make it a great day. Have a great trading day. And if you have any questions, make sure you post them and respond to us on X, and we'll try to get to them as soon as possible. Thanks, everybody.